Welcome everybody to Why the Selection Matters. We'll get underway, and if you can't hear me or can't see me, then please just put that up on the Q&A and we'll get somebody in to help. I'm Alan Henderson, Director of Erskine and Owen, and we're pleased to be talking today about why the selection matters. Just as a bit of housekeeping, if you've got questions, by all means, put them up in the Q&A section, and I'll keep an eye on those questions, and we'll just answer them as we go through. We've also got some questions that people have asked beforehand, so I'll work through those at the appropriate time. And so let's get into it. And there's still a few more people to come, but we'll just get cracking. Has there been a more important election in the last few decades? Crime is up. Healthcare system is struggling. Interest rates are high, which of course are trying to fight inflation, which is high. Massive Crown debt. We've got an undersupply of workers, arguably. Immigration is coming back. And I think it's fair to say that probably people are ready for some kind of change. They say that you don't win an election. It's the party that loses an election. So to me, it's not really about who gets elected. It's about whoever gets elected has got some monumental challenges ahead of them to solve. Regardless of party or coalition, there are a lot of challenges in this nation at the moment. Arguably, New Zealand, compared to other small nations, has not bounced out of COVID in the same way as, say, Singapore or the Netherlands, who have come at it very, very strategically and realised that they needed to do something to attract business back into the country. And arguably, this is not my opinion, other analysts around the world are saying that New Zealand is lagged behind. So today, what we're going to be looking at is what are the key challenges that are facing the country, how each party, based on their policies which are available online, how they'll approach them, the impact on property, and then what I'm talking about or terming is the real impact. So we'll talk about some of the direct impacts on property, but then talk about perhaps what the real impact is for property investors. So once again, if you do have questions, just jot them down on the Q&A section, and we'll jump into those as we go through, and let's get cracking. What are the key challenges facing the nation? So what I've done is split them up into 5 really broad categories: housing, cost of living, what I've termed social, government revenue, costs and infrastructure, and then finance, i.e., mortgages, banking finance, basically. So what about housing? What are the challenges within housing? Broadly speaking, we don't have enough of it. We are undersupplied. It's been a persistent problem in New Zealand that we never seem to get the housing that we need. Now, some might argue that we do have the housing, but when you look at the number of people that are struggling to get into houses that the government is trying to figure out how to help them, and not just those lower socioeconomic decile people, and more broadly, you'd say that we don't have enough of it. What we also have now is that demand is lifting again. How do we measure demand? So the way we look at demand or measure demand is based on national house sales volumes. And so you can see a trend here of how it's evolved over time. And you can see right at the moment, the demand is starting to come back. And why is that? Well, the black line now represents net migration. So basically the growth of the New Zealand population. And you can see that there's a really consistent direct correlation between the two, broadly speaking. And here we go back in January 01, and net migration picks up, and then house sales volumes pick up. So we've seen the borders open after COVID, and lots of holiday working visas being dished out to people, which has been needed particularly for the agricultural sector. And so that means that we can now pick fruit again. And of course, those people need housing. So when I say demand for housing, it's across both rent, people that are demanding houses to rent as well as to buy. So demand is lifting and supply has not necessarily taken off. The other side of it is that cost of building is still high. So although we've got renewed demand for housing, and I think that'll start to pick up, the costs of building have gone through the roof because of inflation. So it's challenging for builders or construction companies to meet that demand in a profitable way. There's still a lot of building companies that are hurting and perhaps holding some land that has gone down in value. Land's always the first and the hardest hit, first to go and the hardest hit. And so they've got to deal with some of those legacy problems from the last couple of years and flush those through for some operators before they can get going and start meeting demand again. So there's a few challenges around that, and that's not going to help supply. Prices are still quite expensive for first home buyers, although they have come back, and you can see from this graph, this is the stratified median house price. So you can see that prices came back and then they're just starting to even out or even lift again. So hopefully you can see my cursor if I put it over here. So you can see it's starting to lift again. So prices are still relatively expensive relative to incomes. Now, what's really interesting, you might say, well, this is untenable. Lots of economists love to say that nearing the peak of a market that prices are unaffordable and they've got to come back by 30%, 40% for prices to housing to become affordable, and they won't ever go up again. Well, that's bollocks. Excuse my language. That's just not true, because if you look at history here, some of these jumps in value look quite benign to where we are now. But of course, you really need to look at it on a percentage basis. And this is the jump leading up, or the uptrend, the boom pre-GFC. And at the time, it looked very, very steep. And we had lots of economists like Bernard Hickey telling the market the prices will drop 30%. We always said, don't think so, because the percentage gain relative to previous percentage gains was not that large. Still basically holds true for where we are today. This is probably a bit abnormal, the spike. So we think it's a perception thing. You might think that prices can't ever go up again or double again. Rubbish. And we'll kind of support that with reasons why as we go through this. Rents are now rising because there's a lack of available stock. The availability of rental housing is quite low and relative to demand, and that's why rents are rising. We know there's more people in emergency housing, and based on we manage around about 600 residential properties, so we've got real insight into what is happening. And I'll talk about some of the stories we're hearing from IMBI when we go into the tenancy tribunal and some of what's going on, which is quite concerning from a social point of view. Residential Tenancy Act and tax changes are disincentivizing private landlords. So, of course, what would happen and have had happen in the course of Labor is being with us is that first of all, we've obviously had the extension of the Bright Line test to 10 years. Didn't help. The removal of the ability to deduct interest for tax purposes has been removed. We've had some price freezes, and we can only increase rents every 6 months now. And we know that at the moment, so one of our property managers who's been has got a South Auckland portfolio, so he's in front of the tribunal quite a lot on behalf of landlords, tricky tenants. And one of the arbitrators that he's got to know quite well, in passing as he left, said, look, at the moment, we've been told to not allow any evictions because the government, or not the government, the people looking after people that have got no housing just can't keep up with demand. And what's happening is, we also know from somebody we've employed that's coming to us from an Airbnb operator, is that the government is increasingly using Airbnb housing to house people struggling to find accommodation. So they have said, obviously, it's not a matter of 100% no evictions, but we are really struggling to get evictions. And this is where we've got people that have got long unpaid, massive arrears, and we can't get them to pay money. And so our only option is to go to the tribunal, and often the tribunal going, no, we find it in favour of the tenant. You're going to have to keep wearing this. So the point being is that landlords are sitting there and going, hey, this is not great. And that's disincentivizing landlords. Why would I be saying that when I want people to invest? Well, we'll come to that later. So, and really interestingly, and by the way, these slides will be available afterwards, straight afterwards. And we will also have a Word document as well with a whole lot more detail around the different policies for each party / coalition. It's not complete, but there will be more detail about the different policies and how that might impact. So available afterwards. This is just showing that private landlords own about 80% of rental stock. So look, for a long time we were forecasting, or Lisa Phillips was one of the other director, was saying 5 years ago that we are going to see more compliance in the residential tenancy space, simply by virtue of the fact by a growing number or growing percentage of the population are renting versus owning. So of course, when you get that bigger voice gets heard by different parties, and then they respond to that and try and meet that demand. So now it's not to say that we shouldn't be looking after tenants. This is just a personal belief. I think it's good to have a free economy, but we also need to look after the less privileged. But I just think it's really interesting to note that from a purely how the different policies impact the market, that if you've got 80% of rental stock being owned by the private sector, don't you want to work closely with those private landlords and work with them, whichever party is in? But really interesting to note, because if they get too disadvantaged, then what are they going to do? So we've seen through healthy homes, of course, we've had healthy homes as well, which is, I don't disagree with the need to have a good standard of housing across the board, because of course, you do get the slum landlord aspect that you want to roll out. But as a result of that, we saw a lot of landlords decide to cash up and sell, and they'd had enough. They'd built some equity and they decided to get out. So some of these policies do have a direct impact. We saw a number of owners sell up and move to different forms of property instead. So all to say that the challenges that we've got at the moment, if I can sort of summarize that up before, what's interesting is, just before I sum up, is that in terms of representing supply, you can see that this is new dwellings consented, is that it's taking a little bit longer for those consents to start coming back, and they're lagging behind demand. So that's another indicator. You can see quite graphically that although demand is picking up, supply is lagging behind, and that'll create a bigger gap again in terms of lack of supply. So to sum up, housing is costly, it's in short supply, and the people who own a large majority of rental stock are being disincentivized. Some might even say demonized. It's been a good tax take, I guess, to try and solve some problems. But you wouldn't say that private landlords have been enthused about what's happened over the last 5 years. Now, I'm not saying that it means that you get out of residential property. We'll talk about that later. So we've got some challenges there with housing in terms of supply versus demand. Cost of living. So second area of challenge is the big elephant in the room, cost of living. Inflation jumped above or snuck above 7%, and now it's on its way back down. So the work of lifting interest rates has truly started to bite. Pre-Christmas, we wrote some commentary and we said, look, we think the back of inflation is broken, that there will be a long tail, don't know how long, for inflation to get fully, to tame the beast again fully, so to speak. But our belief has been that the work that needed to be done in terms of getting, lifting interest rates, and which would in turn force consumers to tighten the belt, that's absolutely been done. The other thing that also points to that, not just that graph, is that milk prices are down, so farmers are now losing money, or dairy farmers are. So the price for milk solids is now below break-even point for farmers. And so the other thing is that, so milk prices are down, China imports and exports are materially down, and global exports are slowing. So this is just look at the trend here of what's going on in terms of exports across Asia, including China, has moved into the negative. And then we know that globally container volumes have also dropped. So globally, exports have slowed up, and that's going to hit inflation. So inflation is not, we just don't think inflation is the issue that it was. It's going to have a tail effect, but I don't think it's an unresolved issue. So although it's going to affect Kiwis, I think the bigger issue is perhaps that a lot of inflation is imported, and so the interest rate can only do so much. The OCR, I should say, can only do so much, because a lot of New Zealand's inflation, unlike some of the bigger nations, a lot of our inflation really is imported. Now, what's really interesting is that the cost to bring a container down from Asia climbed from about $6,000 to $9,000 up to $18,000. It just got ridiculous. And now talking to some industry contacts, it's back down into that $6,000 to $9,000 range. And in fact, every now and then there's even specials going on because they've got to try and backfill. And so to do that, they're offering some specials. So it has come right back to where it was. So that inflationary component has been removed. Social. What about the social aspect? Crime's up, so it's a very visible problem. Lots of ram raids. We've got the Auckland downtown shootings. Education's got its own problem. Truancy is sort of gotten out of control. They're trying to rein that back in as a result of COVID. It seems to have been, but getting kids or getting that attendance rate back up. Health, I've been a bit cheeky in saying, is it third world? I don't have a lot of reason to go to a hospital. My daughter had to go for a dislocated knee, and before that, a pin in her big toe. She was a gymnast, so lots of problems lots of injuries on the beam. But it's kind of, if you haven't been for a long time, it was quite shocking to me to see the state of them. Then we've got some neighbours, an executive couple, and she's from Thailand, and they go back up to Thailand every year just for general checkups, because the health system is a whole lot more modern, and they've got access to a whole lot more specialties. So we're challenged to get the nurses and the doctors that we need here. Immigration has been challenged. We couldn't get the workers, but that's starting to be resolved. I think I'm going to touch on this more towards the end, but I really think that we have got some real social problems. So, yeah, I think we've got, whichever coalition gets in has got some real challenges around the social aspect, and I think perhaps this is what is a big part of what is driving the and maybe it's just me that's hearing it or picking it up, but I think at large, people are saying, hey, we want these things changed. We want the New Zealand back that we used to know, and people have got concerns about New Zealand. We've talked about immigration, and so this is just a reminder that immigration is coming back. This is very broadly, talking about the next challenge, the fourth challenge, government revenue cost government revenue / cost, and infrastructure. So we've now got reports coming through that there's less tax take. No surprise, because Adrian Orr gleefully said that he wanted to drive New Zealand into a recession. And we've had a technical recession. Do we have a legitimate recession that we're moving into now? Well, there's some pretty good signs that things have been slowing down. So no surprise as a result that there's less tax take. Crown debt up from 6 billion pre-COVID to 71 billion, just a little step up. I say tongue-in-cheek because that is one almighty debt to take on, and the government can wrap us over the knuckles for having too much household debt. But hey, let's talk about the amount of Crown debt that there is, and it's an issue. Now, I'm not saying that we could have avoided some of that debt, or I'm not really getting into that. What I'm saying is that it is a big bill to have to address, and we've got to pay the interest on that, and we've got to figure out how to resolve that. Lots of potholes around, so moving on to infrastructure, lots of potholes around the country, and they need. Is that a symptom of not an underlying real problem, or is it a symptom of a real problem that's underlying? We don't want to see potholes. We want to have a country that works. We want more roads. We want trains, and we need a country. We need an Auckland city that's uncongested, and we've got the underground rail that's coming, but there seems to be some issues. Capital. So, is there a flight of capital from New Zealand? I don't have any statistics from it, but what I know is that there will be an element of Kiwis or a contingent of Kiwis that are really concerned, and non-Kiwis, maybe offshore people that have brought money here, that are looking to have a pad here. And is some of what's going on in New Zealand at the moment frightening that capital off? I'm sure we all have friends that are saying, I've had enough, I'm selling my beach house and I'm going to go and get a pad in Sydney just in case. Is that contained to a very small group of people? In times like these, it's not new. It's happened before. When things are looking shaky, Kiwis go, I'm off to Australia. And we've seen that with some nurses and police, the police force getting attracted across Australia for another 20 grand and a sign-on bonus. We'll go through that cycle, but that's a challenge for whoever gets in. How do we retain the intellectual capital and the workforce here in New Zealand and make this place an attractive place to live? And in the meantime, what are the flow-on effects? Finance interest rates high and hurting homeowners and investors alike. There is no doubt that there is pain going on in households, that people are tightening their belts. They're having showers for 5 minutes instead of 10 minutes. I don't know, whatever it is, they're having one less sandwich in their lunch. For a lot of the population, that is really, really real, and it hurts, and that there is no absolute certainty as to when that'll come to an end. I believe it will come to an end sooner rather than later. But at the moment, that hurts. That's making it, but it's also making it hard to get finance, as serviceability criteria are harder to meet. The banks are reluctant. Credit departments are concerned. Their credit departments are there to assess risk, and the markets aren't booming, so they're just being cautious. And of course, it's the credit department that sets the serviceability criteria. Sure, the LVR ratio is eased to 65%. So RBNZ, Reserve Bank of New Zealand, said, well, now you can lend banks, you can lend up to 65% instead of 60% to investors. But we don't think that that's going to help a whole lot in terms of being able to get finance until the serviceability criteria works. So always with getting a bank loan, there's two aspects to it. Have you got enough equity? And can you service the mortgage? And the serviceability criteria, the banks will say, well, it is what it is. It's not up to us. This is the interest rate. That's not strictly true, because the bank sets the hurdle rate. So they'll decide whether it's they're going to use a hurdle rate of 8.6% or 8.4 or 9.1%, and it's very, very easy for them to make small adjustments to allow a whole bunch more people to be able to borrow. And so that's my belief. It's not absolute fact, but we broker mortgages in-house. So Wendy works with us, does that, and so we know how the banks work. So finance is challenging. Sorry, just to finish off that whole section of the challenges. Finance is still challenging. Righto, how will the different parties deal with this? How are the parties going to deal with some of these challenges? And then we'll move on to the impact on property. I just have a breather there, just check whether there's any questions on that. Do feel free to jump in. I'm monitoring them as we go. Housing. Okay, so Labour Greens, I'm assuming that if the left of spectrum won, it would be a Labour Green coalition. More compliance. They've been pretty outspoken about that. More support for the tenant. No cause evictions scrapped. So I'm saying scrapped in general. It's not legislation, but they're making it very hard to get rid of tenants. Greens are very, very keen on rent freezes. We've just had the Reserve Bank Governor of Australia finish his tenure, and the government there at the moment is trying to bring rent freezes in, and he's been very vocal about the fact that it will not achieve what they want to achieve. It's going to result, rent freezes will put off investors, which in turn will cut supply, which in turn will lift house prices, and it will also mean that there'll be less property available, which means that puts prices up overall. So it's kind of like a cyclical event. Look, the reality is we're seeing it going back to the example of people not being able to evict. So what's going to happen? Okay, so if you think about make it personal to yourself. I can't evict this person. Oh my goodness. Do I want to be part of this long-term residential tenant game anymore? Actually, I like the house that I've got. I want to keep it. What can I do? Oh, okay. So Airbnb, I can get $600 a night for my 3-bedroom West Auckland property. But will I get enough occupancy? You go and do that, and all of a sudden you've got 2 weeks of continuous rent. And then you go, okay, well, that's really nice because that's quite good. And then that company turns around and says, well, actually, we're not a private company. We're actually the government, and we were just using a private company to front to see how you performed. We want to take that property for 6 months because they can't find enough long-term housing to house their clients, i.e. those people who have been evicted because no tenant, no landlord wants them. And so now the government has to look after them. And so they go and put them into an Airbnb property because there's no stock available. So it's actually, it's a little bit cutting off your nose to spite your face. What they also want to do is when you're doing a credit check, it's already come in, is that you don't get to see anymore as much information about tenants' credit history because they don't want to disadvantage certain sectors of society. They want to have them the best chance to get in. But of course, what happens? Well, you think you know the full picture of somebody, you get them in, and then you find out that actually their habits are not great, and so they create a problem, and then you end up having to sort out rent arrears, and then back to the same cycle. So what's the solution? What is the possible other solution? I'll say, well, the left will say, well, it's what they've been doing. Is let's build more property. So through Kaingaora, we'll buy or build more property because then we can control it, and we can supply, supply the housing for these people that are becoming homeless, and that will fix it, and which is fairly typical. So whereas state housing, a right-wing coalition is probably more likely to lease property as opposed to buy it. What about on the right? What will they do? ACT wants to repeal the RMA. Good luck to you. It's hard enough to get a revision of the RMA done, which is happening at the moment, which is a massive process. And it's sure it'd be nice in some respects to repeal the RMA because it'd make it a lot easier to get things through, but I don't think that's realistic. Repeal non-deductibility of interest. So National has been very clear that they will repeal the that legislation. They'll also bring the bright line back to 2 years from 10 years, and they'll reverse Labor's changes to the Residential Tenancy Act. So quite a different approach. Cost of living, Labor Greens, pretty much what most left of centre governments would do around the world is tax more. Obviously, Greens are talking about a wealth tax and give that to the less fortunate and give to the poor. Whereas National Act are going to reduce taxes and in turn hope to stimulate the economy, which will in turn create jobs and put more money back into people's pockets. Social, how will the different governments, coalitions potentially approach it? Just whiz through these. We have got, just keeping an eye on time, Labor Greens, reduce the cost of going to the doctor, close the teacher pay gap, remove school decile system, and intro the equity index, which is simply allowing more money to go to the poor schools and students, more free lunches for those that want them, funding in the trades, meaning that you can get qualified in a trade for free, keep the first year of uni free, and justice focused on the well-being, a lot of focus on the perpetrator and looking after the perpetrator to make sure that they are not disadvantaged and not unduly found guilty or treated badly, and collective bargaining back in the workforce. National Act are very focused on reading, writing, and maths, so an hour for each every day. Standardised assessment, spend 10 teachers spending more time learning how to teach. Justice is focused, focused on the on stronger sentences, victim support, rehabilitation, and crack down on gangs. That's interesting because gangs have been getting a whole lot more airtime and more accountability for those on benefits. So there's certain measures where, so for example, a friend of mine owns a small meats business. He gets people in that are on the dole or the benefit. They only have to be there for 5 hours to justify continuing to get the benefit. So they'll turn up for 5 hours and just say, I'm done. It's not for me. I'm not saying that that's everybody that's on the benefit. I'm just saying that that's an example of the kind of accountability that they will address. Government revenue and infrastructure, Labor Greens raise taxes again. Will they leave the debt as is? Will they say, Grant Robertson is probably, I think, correct me if I'm wrong, he's sort of saying, well, actually, we can't afford this as a country. It's enabled us to achieve X, Y, and Z, and we can't afford it. So that's why I asked the question, will they actually want to bring debt down, or will they just leave it at that level? National Act, drop taxes to stimulate the economy. Will they pay down Crown debt? Bill English was a fan of getting rid of debt after the GFC, and there were some advantages of that. Did they go too far? Should they actually have spent more on infrastructure when they could have? Lastly, finance. Not so much that the parties can do directly here, which is why it's not, policies on this, because finance, the RBNZ is supposed to be independent, as it is in all Western countries. However, would note that the finance minister actually appoints the RBNZ governor, and so how independent are they? I'm sure there's a hotline between RBNZ governor and the Minister of Finance, and there's no doubt lots of conversations that go on. We've seen that the only thing that National have said they will do is will remove the dual mandate that is on the RBNZ and in terms of employment, and just keep it focused on inflation. Does the RBNZ have influence over retail banks? Well, no direct influence. But of course, they're going to say things like, well, if you don't bring in an effective DTI, debt to income ratio, if you don't bring that in by stealth, then we may bring it in ourselves and dictate it as a prudential measure. So again, there'll be conversations going on, and of course they've got the OCR there. So really, what we're waiting for in the finance world is for inflation to peg back and then interest rates to come down. Okay, so what about the impact? I'm just going to pause there and just check the questions as they came up. I've addressed the 10-year bright line into just deductibility and residential tenancy act. Also, any possible changes to short stays like Airbnb from councils or government. It is primarily a council issue. So at the moment in Queenstown, they've introduced a maximum number of nights that you can put your property through Airbnb unless you go and get permission from the council to be longer. I don't know that the government will weigh into that. And if National will win the election, how soon thereafter do you think they will reverse Labor's interest deductibility? Look, they've been really vocal about it, and I suspect that that'll happen pretty quick. Personally, I hope so. If National get in and unwind tax deductibility in Brightline, is that likely to push house prices higher post-election compared to other elections? I think the simple answer is yes. It's really interesting that, so the main message, which we'll come into there now, is probably yes. So actually, I'm going to leave that because we're going to start talking about the impact and some of these other questions about impact. So I think we'll just jump into the impact. Impact on housing. Labor landlords continue to be disincentivised to the degree that disincentivises you in terms of price freezes and no cause evictions and scrapping no cause evictions. That means less demand from investors, so builders can't sell as much and can't build as much, and supply doesn't increase as fast as it needs to. And the solution, build more state houses through KO. Not everyone wants a state house. Meanwhile, demand continues to build as the population grows because it has to in order to pick the fruit, etc. So ultimately, prices have to go up. Ultimately. So before we get interest rate relief, because remember, one of the biggest demand drivers is availability of credit. So we do need interest rates to come back so more people can get finance to be able to buy. So in the meantime, it's just rental prices go up, but over time, prices have to increase. And in fact, even just buying, selling existing stock, because you've got so much demand, then it's naturally going to push prices up. So although I probably swing the pendulum back the other way, is that although we've got this disincentivization for private landlords on the one hand, it does have, coming back to like that Reserve Bank of Australia governor example, it disincentivizes, takes some demand out, but at the end of the day, overall demand is going up, and we've got a lack of supply, so the demand-supply imbalance just keeps growing in favour of demand, and so prices have to go up. It's just economics 101. We often say that we don't have a cyclical problem, we have a structural housing problem in New Zealand. The problem is not the fact that we have these cycles. We have an underlying structural problem, and that structural problem is really about infrastructure and supply. So we just don't fix the underlying supply problem. National, they might increase supply by retailing the RTA and tax changes and force councils to rezone rural land to residential. So they've stated very clearly in their housing policy that they, within the first X number of days or months of being in office, they will force councils to open up more land to get them to rezone it to solve to meet demand for the next 30 years. That's great. That starts probably the start of addressing the structural supply problem I've talked about. the challenge with that is it's just not as simple as that. And if you talk to any developer, say, for example, out in Karaka, thanks so much, Joanna. Thank you. If you talk to, note for next time, have a glass of water. If you look at go out to Karaka, the problem is not that they, haven't got the money, haven't got deep pockets to be able to go and subdivide. Often what it is trying to figure out who's going to pay for the stormwater and the wastewater and water supply, and how far they have to build, and these negotiations that go on within council between developers are saying, well, we want, the nearest connection is 20 kilometres away, so you're going to have to build to there. And they go, well, hang on a minute, why should we fork out for that when it's going to benefit all the pieces of land between us and the next connection? Whereas we've just seen in one massive subdivision down in the Waikato, councils come along and forked out 500 million or whatever the bill is, and said, right, we're just going to pay for it, and then you will pay for your connection and through levies, and they're squawking about that. But actually, at the end of the day, isn't that better? Because it happens, it gets the ball rolling. So really, I suppose, interesting that they identify the problem of supply and addressing it, but just might not be that easy to address straight away. It's just bigger than that. Just opening up land it's only part of the problem or solution, I should say. But investors still need to get finance regardless of all of that. Still, you can open up land, but then investors still need to get finance, and developers still need to make costs work, which I've talked about. Won't be a quick fix. Meanwhile, demand keeps building. So once again, we've got this lag between demand and supply. So once again, ultimately, prices must go up. It's just that simple. I got ahead of myself there. So housing, the problem is not cyclical, it's structural. Not enough supply, too hard to get infrastructure built, capital cost often on the developer. Councils can be risk averse and slow. They don't want to be caught up in stuff that they're going to get sued for. They want to get it right. So overall, what's the impact of housing on housing? Is that regardless of which coalition takes office, we have a supply-demand problem. We've got disincentives. So we've got this, residential investors being hit left and right. It seems like every month they've been hit with something else, and they've been demonized, and they can't do this and they can't do that, and they have to spend this. And but when we step back, we go, yeah, okay, so that's an issue. But overall, we've got a lack of supply versus demand. Prices go up. Demand might get held back. So think about a dam. You've got all this water being demand that's been held back by the dam, but eventually it's got to release. So eventually that built-up demand has to be released, because we know that 80% of investment stock is owned by private landlords. At some point, those landlords have got to be let loose or make it easier for them to buy again. So that's housing. That's cost of living. Both parties will play with tax, but inflation is coming down. Wage growth is at about 4.3%. So the differential of inflation to wages puts that a little bit in perspective. Obviously, there's a catch-up that has to go on. Interest rates are probably the real killer at the moment. So cost of living is perhaps not the issue anymore in a medium to long, obviously hurting at the moment, but in a medium to long-term sense. Wages increasing. It's more about whether investors, homeowners feel like they can afford it. Do they have the confidence to start spending? And I think it really needs to see some confidence. We have seen confidence return. So when the message came out that Adrian Orr was pretty much done with OCR interest rate increases, we immediately saw a lift in inquiry across our services, mortgage brokering, buyer agency, our syndicated offers, our syndicated commercial property offers. There's a lot of talk about when interest rates are going to come down. So this is my personal view, not Erskine's view. My personal view is that we might be surprised how quickly it starts to happen. The main banks are now saying, "Oh, it might be 6 months longer than we first thought," but I don't think so. I think we could be at a point where it's going to have to start coming down sooner than we think because of the pain that's going on in the economy. Government revenue, cost, and infrastructure. So they'll give the money to the poor. Inflation takes longer to drop, so interest rates take longer to drop, which means supply is constrained for longer, housing supply, but demand keeps building, so ultimately prices have to go up. So that's just a real quick sort of thought or sequence of how it might happen. Will a Labor Greens coalition, historically they give more money, tax more, give more money to the poor? Will that result in more consumer spending and therefore keeps inflation up? Interest rates will take longer to drop, but demand keeps building, so ultimately prices have to go up, but it just means that house prices might not go up at the same rate because it's taken a while longer for interest rates to come down. However, a National Act coalition will result in more fiscal discipline, less handouts, and perhaps inflation drops faster, which means interest rates drop quicker. In both cases, prices ultimately go up. It's just a timing issue. It really does come down to how quickly interest rates come down and how quickly we can get our hands on finance more easily. Sorry, a slight repeat. Finance. Are we on a precipice? Wage growth, but job ads are dropping. Farmers are losing money. Exports are down locally and globally, and the government tax take is down, and some people are leaving for Australia. If we head into a real recession, I think we expect to see inflation tumble and interest rates drop. It's just my opinion. That will lead to more people being able to afford property, more demand, equals upward pressure on prices. So this is the 2-year interest rate. The black line is the 2-year interest rate. So I'll just let you have a look at that for a minute. And while you're doing that, I'll just check questions. Come back to that question in a second. So just a note that what you tend to get is that once sales volumes have dropped off, you've typically seen interest rates drop really quickly to try and stimulate sales again and the economy. And we've had the drop off in sales volumes, but this time we've had interest rates go the other way. And obviously that's a bit counter-cyclical, and that's because of inflation. So we need to see those interest rates come back, but we probably are due for that. Let's wait and see. And finally, social. This is where the parties have different approaches. Labor Greens are all about the tenant, fighting against institutional racism, spend more money to support tenants and the disempowered, I guess. Again, I'm not saying where I sit on the spectrum. Don't disagree with looking after the impoverished. Absolutely agree with looking after the impoverished. National Act are all about accountability, sentencing, prove you can work, reach the standard. It's just a very different approach. So somebody said here, National Act is more developmental in nature versus the other coalition. Historically, I'd say yes. I'm probably personally a little bit disappointed that the previous National Act government didn't do as much as they could have on infrastructure. Perhaps that's a naive understanding of why they didn't, or perhaps there was more infrastructure development that went on that I just don't know about. But we certainly aren't charging ahead compared to other small nations. Look, we're a democracy. We're not Singapore, who can benign dictatorship. Maybe that's the wrong term, but they've certainly got the ability to do things faster. It's just unbelievable how quickly they can, over Christmas they decide they want to host the Grand Prix circuit, so they rip up a few roads, rebuild them, don't need consents, they just do it. We don't live in that economy, so it's a little bit harder. But but typically you'd expect a national act government to jump into infrastructure a little bit more. Possibly at the end of the day, that impacts the social makeup of New Zealand. As the population grows, people still need places to live. So in the short to medium term, perhaps the social aspect of the social challenges that we're facing has less of an impact on property values. Like what I've been really speaking to are the factors that just mean we've got more demand and less supply, and that's just going to hit price increases. But in the longer term, is it that some of these social issues having a slow eroding effect where New Zealand becomes less and less, or just changes how we live? We've been a very sort of egalitarian nation, but is it that we've got a growing disparity between the rich and the poor that means it changes, the problems with the poor become exacerbated, and it changes how we live? So we've come up living in a civil society, and we take that largely for granted. But now we've got the postmodern era where what is true for you, and there is no absolute truth, and that becomes a different conversation. And so we live in a different world than maybe 40 years ago. And so that creates different ways of thinking, and that creates different ways of acting. And I know that's starting to get sort of reasonably philosophical and perhaps too theoretical, but I think it's just worth thinking about, because what I'm going to present in a minute, it starts to drive more of that. And we haven't really had to think about the impact of those things. But just to summarize that up in a graphical format, is that we've got social issues, and I really think that we take them for granted a little bit and say, well, that's social and it doesn't have any impact on, and it doesn't really have an immediate impact on. I know it sounds really brutal, but okay, some gangs driving down the highway, how does that impact housing prices? It doesn't in the short term. It doesn't. But the accumulation of, and I'm not saying that gangs driving down the highway are wrong. I'm just saying that for some people react to that. But certainly shootings in downtown Auckland, we're not used to that. Makes people stop and think. So that's how I'd summarize up. Now, the real impact, just before I do that, I'm just going to check some questions because, excuse me, get my mouse working. Check my questions over here. What would be the impact if depreciation was removed for non-residential buildings? Labor suggests that this will happen to help fund social policy. Comments like removing GST on fruit and vegetables. Actually, that probably just highlights something that I haven't talked a lot about commercial. And the way we approach our analysis of the market is the reason we focus around residential is it's a lot easier to measure. There's a lot more statistics, but we sort of use residential as a proxy for what happens in the commercial world. Obviously, there's a lot more levers. There's different types of commercial property, but by and large, I think we can use residential as sort of like the canary in the cage, and to tell us what is broadly happening with commercial, because it does pretty much follow suit. So consumers spend less, and then that flows on to the business sector. Retail suffers, etc., etc. So there is a flow-on effect. Okay. How will a change in government help property investors? I think we've addressed that. How would do you see any positive aspects or opportunities for the property market if Labor wins? So I think I've covered that off, saying that in both cases, I think property prices have to go up. So it's really about positioning ourselves to be able to take advantage of property price increases. Holiday homes how have prices been impacted by rising mortgage rates? So holiday homes, typically your beachfront properties, if you're in a beach area, are pretty resilient. But the further you get back from the beach, you have these massive price steps downwards because it's all about the beach. So typically when you get back to your sort of, 5 streets back, it can be pretty ugly, and certainly beach resort sections can get really impacted because they're nice to have, and land is always affected first and hardest, as I said earlier. Do you agree with RBNZ recent new prediction that house prices will rise 9.5% in the 2 years to the end of 2025 compared to the previous forecast of 0.4%? I'll need to check that stat. I think anything is possible. We always come back to looking at underlying demand and supply, and it's kind of going, my goodness, we've got a growing lack of supply, relative demand. It's just going to build, and then I think it's going to have to pop, and then we'll be back into the next cycle. Righto, this is the last part of the, coming up to an hour. So this is the last part of the last section of the presentation. So then I'm saying, but what is the real impact? There is one question here that I need to, where am I? Sorry, just get my mouse in the right place to. Okay. Sorry. Any view on the impact on one, commercial real estate, healthcare real estate, infrastructure sector, education sector, leisure and hospitality? My overall comment on commercial property is that there's a wash through that's happening at the moment with people that are breaching interest covenants that have to be rectified. It's not to say that people that are breaching their interest cover ratios are destitute. In fact, often that's not the case. Often they've got lots of equity, but they're just breaching that. And so the bank's saying to them, you've got to fix that up because you're ruining reviewing some of our ratios, which we're accountable for, and impact our credit rating. So fix it up pretty pronto, or else we'll do it for you. And they're saying that very nicely and being very orderly about it. But as a result, there's some private landlords that are having to cash up and take prices. We've just secured something for that we've got at a pretty good price, and the vendor is taking a haircut of a few million. And we know that this person is by no means destitute. It's just working through. So there's been an impact on cap rates, but I think it's a cyclical thing, and that'll slowly, as that washes through, it'll slowly come back. Righto, the real impact. So a collection of challenges for landlords. Sorry, dancing around. Building weather tightness issues, increased compliance, tenancy, healthy homes, rent freezes, less flexibility to put up rents, credit search ability being restricted, no cause evictions scrapped, finance, triple CFA, AML, serviceability, LVR limits, shorter interest-only timeframes, got tax, non-deductibility of depreciation interest, got the bright line rule, got even tainting that was introduced quite a while ago. You can't be a developer and a land holder, an investor, long-term holder. Got the challenges of the RMA and council risk aversion, congestion, roads are busier, that makes going to see properties, whether to buy or manage, more time-consuming. So plenty of challenges. So the critical question for us is really not what property prices will do, but as investors, how are we best to buy and manage property? And what's the answer? So we think the where and the what must be right. So where you buy and what you buy in this environment becomes even more critical. Secondly, we think that scale helps avoid issues. And thirdly, expertise. Don't be penny wise and pound foolish. So if I just expand on that, the where and the what, start targeting areas, streets, and types of property that will attract less problems. So for example, new properties, you can deduct you can deduct interest for tax purposes. And then the areas that are gentrified, or areas that are gentrifying but go to the best street. Why? Because you're going to attract better tenants. Now, I'm going to give you three cheesy quotes on this slide and the next two slides. Three Kiwi cheesy quotes. Every dunga has its day. Good old dunga, we know what a dunga is, a dunga car, a dunga property. I used to go and buy dungas in South Auckland and do them up and sell them. We think that day has been and gone. When I first started out in property, came back from overseas and started, picking up South Auckland properties, shows my age, but pay no more than 80 grand in Otara and no more than 120 in Mangere. And we just go around all day long making cash unconditional offers, pick them up, get the spray gun out, not us personally, but spray them and cheap carpet, whack them back on the market and make a buck. And nobody wants that anymore. Those days, I think those days are done. Healthy homes means you've got to put in a whole lot more. And so focusing on the what, get into property that's simpler and cleaner. I think that's the world that we live in. Scale, if you own 10 new rentals, the pain of one bad tenant can be spread across other tenants. If you own the whole apartment block, you can control maintenance. If you buy a piece of rural land, that's scale with potential rezone, you can potentially get better upside and you got no tenant hassles. And then you say, but I've got a 3-bedroom state house. Okay, so redevelop it, get rid of it, gate it, get a gated community that you can control, put 6 3-level townhouses on them, and you can control the whole thing, gate it, make it really appealing and attract a different tenant. Don't fight finance. So hang on, what was my quote back again? Oh yeah, the sun has set on solo sailing. Okay, cheesy, I know. What I'm really trying to say is that it's go with scale. I think find ways to scale up. The days of just the dunga in South Auckland or wherever it is, there's still merit to it, but I think you've got to have a plan. You've got to, by all means, do it, but have a plan to move towards properties that are going to give you good tenants. Use experts. Don't fight finance. It's a nightmare trying to get finance. There's a whole lot more information that you've got to provide. There's AML. What the bank wants to see is quite nuanced. It's harder. So use a mortgage broker. If you own a whole apartment block, you can control maintenance. I haven't updated that correctly, so I'll ignore those last ones. That's a repeat. But so that's your finance. Property management. So use an expert. Don't try and do it yourself. We manage properties, and the knowledge that we have of the Residential Tenancies Act is really deep, and it's really important to have that knowledge of what you can and can't do. When can you increase the rent? What is the strength of the heat pump that you need to have in the house? Do you need underfloor and do you need to have underfloor insulation? How do you get a tenant out when supposedly no cause evictions are scrapped? How often can you increase rents? So that's really important on the property management side. So Point Property Management is our sister company that we own. They're great. They're great at what they do. Call us if you have a property that needs a great property manager. And as I said, we've got an in-house mortgage broker. Then it comes to buying property. We've got a buying agency. We're licensed under the REAA. So we can go and do that for you. We know where to buy, what to buy, and let us spend the time on the road for you. And then in terms of if you don't want to be bothered with residential, then go to, help you with going back to scale. We've got syndicates as well that we can offer, and that's a really low fuss way of investing in property. So Montreal Property Syndicate, which we've only got a few units left on this, and it's out there at 8%. It's gone really, really well. This is a great, it's got Ideal Electrical as the tenant, and it's just been settled, so we're underway with it. And for 100 grand, you can get into that and be a part owner of that building without the hassle, any hands-on hassle. We take care of everything. So that's us. What's the overall takeout message is that I think there are a lot of challenges for whichever government gets in, and we want to see them work through those things. The sort of immediate term impact on property, I don't think it matters which coalition we get in. I think it's going to be that property prices have to go up. It's just when and how quickly they go up, and that's a factor of when interest rates come down. I think interest rates personally could come down sooner than we think. I think the real issue is some of the social issues which have an impact on how, where, what we buy. And I think that is really important. Don't get caught out with a whole bunch of problem tenants or problem properties that takes a while to unwind. And if you've got that portfolio, and additionally, if you're thinking getting into the market, then come and talk to us about how we can help by providing expertise and helping to give you access to scale. So thanks to everybody who's dialed in. As this presentation will be available afterwards for anybody who wants it, and then towards the end of the week we'll have a Word document as well with some of the detail around some of the policies. So by all means, email in some more questions if you've got them. I'll just check that I've answered everything. Yeah, pretty much got through all the questions that were asked beforehand. So hopefully that was helpful to everybody, and would love to hear from you if you've got any questions. So thank you everybody for joining in.